Yo, what's going on? It's your boy Check Investing back with another YouTube video. Thank you for stopping by. You know what we do on this channel? We talk about ICT concepts, right? This is a particular video for those who are in the beginner to intermediate to even advanced stage of ICT trading. I'm sure there's something that you can learn from here. We're going to be going over something pretty interesting today, and that is, a lot of times you can come into the market and you're like, man, today's a day with news. Price action should be great. Yeah, well, that's not the case. There are some other factors that you have to keep in mind whenever you're logging into your charts in the morning as to whether or not you're going to go full risk or half risk or just close the tape, right? So we'll get into that today. Normally this is the daily NQ review, right? We talk about every single daily candle, every single, 1 hour, 15 minute, 5 minute, 1 minute. And we talk about that every single day on this channel in this series. Sort of a mentorship where I'm walking you through price action on a daily basis, what happened, where you could have made money, and what could do better for next time. Now, we also trade the ICT22 model on this channel, so you will learn about that as well. How that entry model is the flagship trading model on this channel. ICT actually said that this is the one trading strategy that he would want to teach his daughter. That's how easy it is, right? So we'll be going over that. So stick around, get comfy. Let's watch this video together. And press that like button if you like what you're hearing so far. That's what it's for. Press that like button if you like the video. And also leave a comment below if you have any questions, or just leave a comment below just saying anything. Helps the algorithm push my content. It's really helpful to me. So thanks for sticking around, guys. Also subscribe, press the notification bell. A lot of you guys are watching and not subscribing, so please subscribe and join the free Discord below. Lastly, without further ado, let's get right into it. All right, daily candle. So what happened, right? After purging and reverting below this low from the Friday, 20th December, we reversed higher, right? After dipping back into this candle's wick one more time, we reversed higher, took out a couple of daily highs, and then came all the way up into this FVG. What is this also? External range liquidity into internal range liquidity. External range liquidity is when you take out a low, and then internal range liquidity is basically a fair value gap that you are returning back to. And so MMXM Trader talks about this a lot. Give him props for that. That is what you see, price returning back into this daily fair value gap SIBI. So price returns there and then closes in the lower half of today's daily FVG candle. And so, when this is happening, a lot of times what this could be signifying is that price could be coming lower the next day. You could see a rejection the next day, especially because we had a break of market structure below this low on this candle. Price came back up into this premium array and then ran lower and broke market structure again below this low, and now we're returning back into this premium array, and price could continue to run lower from there. But one thing I wanted to keep in mind is that we are inside this weekly FVG right here. So keep in mind, price could still be getting supported by this weekly candle. So it depends on what the weekly candle wants to do. I'm going to be keeping a close eye on that. But based on the daily profile so far, it looks pretty likely that we're going to have a bearish day. Plus, we have this volume imbalance lower. That price could run lower too as well. And plus this daily order block, right? Let's keep these on here. It's previous day high and low. Ended up taking that out pretty aggressively. So on the 4 hour, what do we have overnight? We had a bit of an expansion going into London and going into the pre-market session. Now, this is exactly what I'm going to teach you guys about, what I was saying in the beginning of this episode, right? This candle right here on the 4 hour, right? Pretty two large, massive candles going into the AM session. What does that mean, right? AM session is very likely to be trash, right? It's very likely to be trash. Especially when we came into this daily FEG level, right? We're inside it. We're not showing a willingness to get past it, right? We've already had a large expansion overnight. How many points did we move? Pretty much overnight, right? Like already what? 300 points, bro. Like 300 points. The average daily volume is not even like, typically it's like somewhere around 250 or something like that, right? So we've already moved more than the average daily volume overnight. The AM session will most likely be trash. In fact, the rest of the day is likely to be trash, especially because it's a what? It's a Monday, right? It's a Monday. Even though we did have news, we had news, right? We had news at what? 9:45 a.m. It was an orange candle folder. I mean, come on. Right? Like this is not likely to be a day where price action is going to be optimal. What does that mean? Close your chart, wait for tomorrow, right? Or if you must trade, wait for the macros, right? Wait for very, very, very obvious price action. Now, I made the mistake of, making some executions today. And that's just because one of the things I lack, is detailed self-control. A lot of times I'm doing my job on the side and you know, I kind of neglect the things that I know are to be obvious, and I enter trades. And, you know, what I need to do a better job of is to really understand the landscape I'm in. And it's like, is this an optimal environment to be trading in or not, right? And so we're in this daily FVG, all the things I mentioned before, we've taken out, you know, we've returned back to what? This is the previous week low. Oh, this is the previous week high. So we took out the previous week high, right? We took out this previous week high. I mean, likely to chop for the rest of the day, right? This is not, can't, you know, deep premium, not a time for us to be trading, right? And so on the 1 hour, what do you have? Coming into the morning, you know, we're rising all overnight. Coming into the morning, you have one more dip back into this 1 hour BISI, right? There's SMT at these lows with ES. ES actually ended up taking out this low, but NQ did not. And so price continues to run higher and fill in that whole daily FVG civvy. But as you can see, after that, going to 11 a.m., you know, price action, you know, becomes a little bit choppier on the lower time frames. We did fall down though from about 12 o'clock to, you know, to the end of 3 o'clock. Not taking out these relatively equal lows. We did at the last minute run higher. And you can see that's some pretty wonky price action, right? Like we should have taken out these equal lows, right? But because it's of all the factors I mentioned before, you know, it's not going to do what you want it to do. Instead, we're engineering more liquidity that will probably take out tomorrow, right? And so we formed the high of the day here at 11 a.m. and then we ended up reversing. One thing I also want to talk about once you get down to this 15-minute time frame is this opening range gap that we formed today. Really large opening range gaps. When you see a really large opening range gap like this without any reason to really come back lower to it, price should expand for the rest of the day, right? And so, you know, admittedly, the only reason why I even thought about trading today was because I saw this large opening range gap, but I thought this was going to be one of those ranging days. But look at how we're interacting with this daily fair value gap. Once we run higher and get to the top of it, right, we're just closing around the top, not really decisively expanding higher. I don't want to see that. When you see this, price is likely to reverse, right? And so, you know, when you see it's hovering above this daily fair value gap like this, that is not a bullish sign. That is a very bearish sign that price could be running lower, right? I want to see price energetically continue to spool higher to take out maybe some of these relatively equal highs over here, right? It's not doing that. So it's really telling you that we're mohawking over this daily FVG and we're going to come back into the range. And that's how you can get a return back to this opening range gap that we left open for pretty much most of the morning, right? And so price makes this large expansive candle in the morning after wicking lower and forming that SMT with these lows, returns back into this 15-minute fair value gap, and then makes a high at 11 a.m. But then creates a 15-minute bearish order block right here, right? Because we closed below this candle's open, right? 15-minute bearish order block, and then price returns back to that redelivered rebalanced price range that forms with that bearish order block on this candle at 12, and it continues to run lower. Basically spooling lower all the way until about 245. So classic V-shape kind of situation here, right? And when did that start? It started at 11:15, where price reversed on the AM move. And you know, typically I would have liked to see a little bit more of a consolidation before price did this, but because we just went straight up and it's time for us to come back down, a lot of times, like, you know, like think about retail, they're looking at this as trend line liquidity. And so price is, you know, going to have pretty low resistance move back down lower. And so price ends up running lower and making a low at 3 o'clock and then coming back into the daily range at about 4. On the 5-minute, right, price creates this, it breaks this low, right, forming that SMT right here, breaks market structure, closing above it, right? And this is a great 22 mile to take, you know, one of the only 22 miles at like 9:30 that just look very obvious to take. But the problem is that we're in this daily FPG, so honestly, not something that I would have, you know, been looking at in particular. Plus, at 9:30, you can have a lot of whipsaws, so price could have come back down all the way here before running higher. So I just don't really like to take trades around that 9:30 time. But you can see that, you know, we continue to consolidate and run higher, but then start to break down post 11:30. That kicks off the lunch macro where we start to reverse on that daily move, and then run lower, retracing back into this 5-minute SIBI at 12:50, and then making the low at 2 o'clock, consolidating until about 2:45, making another low at 3 o'clock right here, failing to take out these equal lows, right? And then reversing, breaking market structure to go higher, right? And so let's look at the 1 minute real quick. And I guess this is a good time to talk about the ST22 model. So what's the 22 model? 22 model is when you have a high, low, that purges an old low, right? So let's say this is an old low over here. We purge that low, then break market structure above this high, fair value gap, returns back to the fair value gap, and then runs higher. Now, sometimes you won't get back to this fair value gap. We can go over examples on that on other videos. But that's basically at a high level of 22 model. So let's go over an example, right? So you see this low, high, lower low, break of market structure, couple fair value gaps here. Price does not return back to the fair value gap. Why? Because you have this inversion fair value gap in the way that price ends up returning to. So in case you can't see that, price returns to the high of that inversion fair value gap plus the high of its opening range gap and runs higher. Now, is this a 22 model worth taking? Because we have this daily fair value gap in the way, personally, I would not take that. Look at how trash price action is, basically. And then we start to hover over. And there's a couple other 22 models I'm going to go over because I did end up taking this. These are the trades I took. So you have this low, high, lower low, break of market structure, comes back into this fair value gap and runs higher. Now, I was in small profit because I saw this opening range gap and it stayed open like this. A lot of times when that stays open, like price is going to run higher. But because of all the things I mentioned before, right, especially when you get here and price is just hovering around for the next couple of hours, like price may reverse back on you. And so what do we have here? We had another 22 model that formed at the high of this daily fair value gap. So low, high, lower low, break of market structure above this high right here, fair value gap. But that failed because of what I mentioned, right? We are now bearish because we are actually respecting this daily SIBI. Plus on higher time frames, like we are really at a premium array that should be coming lower, right? The IRL down to the ERL. So you have this high right here that takes out this high. You have this low right here that gets taken out by this low. Break of market structure, fair value gap, very hard to see. Fair value gap between this candle and this candle, runs into that and runs lower. Now, reason why you could be taking a lunch trade here is because we consolidated basically pre-lunch for like a couple hours, for an hour and a half. So a lot of times when that happens, lunch can actually have a pretty decent move. And so price comes back into this SIBI, runs lower. And what are you targeting? You can target at least the open of this opening range gap, because if we're reversing after creating a large gap like that, we're probably coming back to that gap, right? So that is a very, very decent trade. Let's even look at like what the R would look like on that. So you set your entry at that fair value gap, aim for the opening range gap. That's a 1 to 4, right? Nice. And that's pretty much it. There's not really any other 22 models worth taking. We did have these equal lows over here. So when price created this high, that got purged out by this high and breaks market structure lower, because this drop is so vast, like I don't like taking 22 models that look like that. I like taking 22 models that are a lot more obvious, what we saw above there, that it's easier to enter. This is too far stretched for me. So not something I would take. And nothing here really worthwhile that looks very obvious in my face. And because we have those equal lows over here, I'm not taking any 22 model buys until that liquidity gets purged, right? And plus we have the rest of this opening range gap below here, and we are reacting from this daily SIBI. So that's pretty much all today. That's the only opportunity we could see in the 22 model basically on this Monday. Hopefully you can see why price action was really trash, right? A lot of move overnight, so really just shouldn't even trade it today. You know, or if you see a lot of move overnight, wait until the PM or lunch session. Maybe that's when you can find a good opportunity. So hopefully that's been helpful for you. Make sure you press that like button, subscribe, press the notification bell, leave a comment below, and join our free Discord. Love y'all. Peace. See you in the next video.